You are listening to Digging In Podcast, presented by Rooted Wealth Advisors.
Welcome back to another episode here via Zoom on the Digging In podcast. For those of you that might not know me, my name's John Savarino. Hopefully most of you do. Today is another very special guest, my good friend Jake Lehnerr. He is the Vice President of Life at Advisors Excel. Jake, how are we doing this morning?
Really good, man. Thanks for having me.
Really good. I like that. No, man, I know you're, super busy with just kind of the family, working with a lot of different people. So I really appreciate you taking the time to spend with me. And as you know, but for those of you that are watching, what I want you to know, our goal today is just to help, educate, speak to life insurance, as a whole, right? What is it? Where does it fit in? How has it been incredibly beneficial to some clients, in the past? And then also want to talk about, long-term care because, Jake, as we were kind of bantering there at the beginning, like what it's been like for me is like back in the day, long-term care insurance was really prominent. Feel like a lot of carriers went away from it, and then now there's some really unique, good, long-term care insurance products out there that a lot of people just don't know about. But we'll get into that. First, Jake, I think just maybe taking a quick minute to introduce yourself, and one of the questions that I get, or I think some of the wondering is like, who's Advisors Excel, John? Like, who are these people? So just if you could take a minute, would love to hear more about that.
Yeah, man. So we're based out of Topeka, Kansas. So I'm coming to you guys via Zoom here from Topeka, Kansas. Talking to John, I think we're getting just as much heat as y'all are getting right now. So it's typical for the 4th of July here. But yeah, my quick commercial about me is I'm a daddy of 4 daughters. So that's like my life. If you want to know about me, that's me. I'm a daddy of 4 daughters. So I'm a girl dad. But my role here at AE, like John mentioned, is VP of Life Insurance. Advisors Excel really at its core. So you guys, Rooted Wealth is an independent financial advisory firm. And that's something that is very special and unique because not only are you guys fiduciaries in the way that you offer different lines of business for your clients, but you're also fiduciaries because if insurance products are going to be part of the client's plan, you aren't tied to a specific insurance company. And your clients may not know that, but there's a lot of financial advisors out there that when they offer insurance products, because of their contracts or their big box store that they work for, they can only maybe offer one or two solutions that are on the shelf for your clients. With you guys, because you are independent advisors, you work with 50 plus, insurance companies. So really our biggest job and role that we play for you and your clients is because you have the opportunity to offer so many insurance companies, who are the best companies, what are the best products, what's going to be the best way to get from point A to point Z and get this client in this good solution. We kind of help with any and all of that. So really, we're just kind of the middleman between the insurance companies that offer these products and the advisors who sell them.
I couldn't have said it any better. And man, I did not know you had 4 daughters.
Yeah, man. It's I love
I
being
get,
I would have loved to have got a son out of the deal, but I love being a girl dad. My oldest daughter is only 13, so I tell everybody, like, ask me again in 4 years how much I love being a girl dad. Uh,
yeah.
but it's funny, once you have kids, that's your life. It consumes my whole life. Is just, and I love that, and that's what that's what I'm here for, is to be dad first and foremost. But so when people just ask me, like, tell me about you, that's me, man. VP of Life Insurance and
That's the,
girl dad.
that's really cool.
Yeah.
So let's kind of just really start with the fundamentals of life insurance. And what I mean by that is like one of the first things that I learned from Zach, about life insurance is like the dime method that I'm sure you're familiar with is like,
Mhm.
hey, there's typically going to be four things that life insurance is going to take care of, right? Death benefit, burial, I is going to be that income replacement, M is going to be, mortgage or debt, and then E would just be education, right? For your kids. But we know that's super fundamental and there's a lot of different ways it can come into play. But maybe just give us your perspective, as high level or low level as you'd like.
Yeah, man. Well, so because we work with so many carriers and different products, and I've been with AE now about 8 years, so I kind of nerd out on these things, and I'm pretty analytical. So, like my idea of life insurance is very different than even when I talk to my dad or brothers or somebody about life insurance, it's extremely different as you can imagine, right? But really, like so, what you just mentioned, the dime method. One of the for any younger clients that are listening, any young people on this Zoom. Um, Definitely a vast majority of the public is underinsured. And a lot of you probably even know you're underinsured. It's just one of those things that nobody likes to talk about their demise. And then it's just another like process to go through. So I understand why the can is kicked down the curb a little bit on that. But really, for those younger clients, it's everything you just mentioned. Like, picture it. Really sit down and picture it. If I were to pass away tomorrow, what would happen to my loved ones, right? And so all those things you mentioned that life insurance can provide. It's an influx of cash for my loved ones when I pass away. So it's like the greatest gift. And I'm sure all of you, and I know I have, like, I know people who were either underinsured or just not insured at all, and the unforeseen happened. And what a terrible, terrible, while your family's grieving, they also have to worry about their future, right? So definitely for younger clients, insurance is a needs-based thing. Like it's all insurance is shifting risk to an insurance company. And so that's all you're trying to do with the income replacement for younger clients. But what's interesting is what a lot of people don't know, and what I've really like kind of mastered and here at AE, is a lot of what we do with insurance is because of the rules the IRS has put in place for us. So we do a lot of permanent insurance. And what's interesting is a lot of the clients who elect to buy permanent insurance, it's not really a needs-based thing. It's a why do we want this, right? With our financial picture and what we're trying to do with our assets, why would we want permanent insurance? And to really like sum it up in just a few things, the reason clients want permanent insurance is because it's a very tax efficient way to pass on funds to your loved ones. So if you have funds that are going to go to your loved ones anyway, or maybe a cause that's dear to your heart, because IRS deemed it so, life insurance, death benefits pay out tax free. So that's like a very tax efficient kind of an IRS loophole. A lot of people will say it's the greatest IRS, loophole in the tax code. But so permanent life insurance fits the tax mold. And number two, because the new products, and when I say new, I kind of mean literally like the last 10 to 15 years, are these really unique chassis that have, not only is it tax efficient if I die and pass it on to my family, but it also has stipulations in it where I can maybe take from that death benefit while I'm still alive to help pay for long-term care. And it might have a cash component to it that I could dip into the cash if I need to when I'm living. So it's this kind of like Swiss Army knife type asset that we can use in retirement if we need to or want to, or it just passes on tax efficiently to my kids. So it's not that clients need those things. It's that with their financial picture and what they're trying to accomplish, it's a really nice tool for them to add to their plan. And so they choose to do that.
So it's interesting you kind of say it like that, and I think though, especially from a more analytical perspective, I think what you're suggesting is that there's a lot of leverage to be found in permanent life insurance in a lot of different ways, and it can also fit in a lot of different circumstances, which that brings some complexities to it, but ultimately it's going to be unique to that individual, that family, in terms of what fits and how can it be leveraged. That's kind of my high level understanding from what you just said.
For sure. Yeah. It's all, every plan, when you get to this point, right? So term insurance is just kind of a commodity, and you price it out, and it's, a lot of it's kind of a rinse and repeat almost. If you sit down with 10, 30 to 40-year-olds, you're going to be asking them questions about how many years of income do we want to replace? Do we want to pay for the houses to be paid off, right? It's kind of the same process. For clients as they get older, it's way more customizable, I feel like, and actually asking questions on what do we really want to try to do with this, and does an insurance product make sense? But yeah, there's definitely one of the thing I think misconceptions with permanent life insurance for clients who are, nearing or in retirement is that there's no way they can either they feel like there's no way they can medically qualify for insurance anymore, which sometimes is true. We know that, right? But they think that sometimes just because of their age or because they're taking a statin or blood pressure, right? They just assume that they won't qualify for insurance. And that's definitely not always true, right? And then, or if they do qualify, it's going to be so expensive that it doesn't make sense. And unfortunately, there's definitely some reasonings why those people have those ideas. There's probably some agents that tried to stuff life insurance onto clients who it wouldn't have been a good fit for. But again, that's one of the roles we help with is like any client that we get asked about and we build a plan for, it's got to make sense into their plan. And that's why like you guys do such a great job, because it's not, if we look at the overall situation and the insurance product isn't doing what we need it to do because of health or age or cost or whatever, then it's no longer a viable solution. So we take all that into account with retirees. The life insurance is like an asset that's working in harmony with the rest of their assets, and it's got to make sense, or else we find another solution.
And I think that's a great point, because I think kind of backing up to what you had said previously, I think there's this, these qualms or just kind of this pushback on the concept as a whole. Because yeah, like I always just kind of use the example when they were 25 or 30, they were kind of pushed, this whole life product down their throat, and they, for whatever different reason or whatever the case may be, there's just a bad feeling, a bad taste left in their mouth. And I think one of the things I love most about working with you and your team and Advisor Excel is like, hey, Jay, team, I have this case here. I don't think it makes you a is, will support that, right? Or just like, hey, shoot me straight. Does this make sense or does it not? Because we want to make sure that we're doing the right thing, for the client when it comes to the situation. Or I think what's nice is, hey, this is the situation. What do we need? What can we do to make sure it's the best for them? And like we can put together some pretty unique, good things together. So yeah, I would it's just the most common misconception because of kind of those past experiences from what I've gathered. You had mentioned this long-term care concept. So I had mentioned kind of at the beginning, maybe elaborate a little bit further on how the long-term care insurance world has kind of done this up and down as of recent, and just kind of elaborate further on that, would you?
Yeah, man, it's kind of interesting. Again, I kind of am nerdy about stuff like this, but if you look at like the evolution of long-term care insurance, because there was a time where long-term care just in general wasn't really even a thing, and then these long-term care facilities started to pop up, and so these insurance companies started to offer insurance for that. And it was again, it's all about shifting risk. So premium dollars in versus how much dollars out the insurance company would pay if and when you needed long-term care. There was some pretty good leverage in those products. And the issue with those was, and so forever, that's all that existed was long-term care insurance, which is basically like car insurance. You pay a premium ongoing forever, and then if and when I need long-term care, they pay out for that, right? But it was interesting timing, because like when these products first started to really kind of hit market and become popular, at that same time, we had clients like medical technology was kind of booming. And so a lot of clients were starting to live longer, but not necessarily living longer in a healthy manner, right? So it was like long-term care claims started to really uptick. And so these companies that first started to offer these products got into a pickle where they could no longer, make claim payments. And so their solution for that was, unfortunately, hey, all these policies that we sold where the client was told they had to pay, this premium, we can't sustain that anymore. So now, Mr. Policyholder, here's a letter to you, and we need to increase your premium by 2 times or 2.5 times, right? So it got to be this very, I mean, it was a big deal. There was a lot of like regulation and court cases, as you can imagine, around this. And so they've done some things in that with those products in particular, the traditional long-term care products, they still exist. They still aren't my favorite. I'll get into that here in a minute as to why. But there's been some industry regulation on them that make them a little bit better. But the two biggest things, so as those products kind of came out, it's like, hey, they're great because they give you leverage on your dollars. But the two big things that are negatives to them is, number one, the premium aren't guaranteed, which I just alluded to. So you could sign up for a premium today, but that could raise in the future. And I bet you a lot of the people listening to this podcast probably know a loved one or friend or somebody who that's happened to, right? And I know you guys have seen it, John, with some of your clients. But number two, am I going to need long-term care, right? So do I want to pay a premium into something for maybe 20, 30 years, and then, I pass away peacefully in my sleep or in a car crash or whatever, and I paid all that premium for no benefit at all, right? So as those things kind of started happening, the rate increases and clients just really determining, I don't know that I'm going to need long-term care, the sales kind of came down. Long-term care insurance sales started to decrease. And then some insurance companies started coming out with these really cool products. These are still what I like the best to this day. Everybody has different names for them. I call them an asset-based long-term care policy, but they're basically long-term care insurance, but built on a life insurance chassis. And so the main reason that's important is because they have a death benefit to them. So now a client can shift the risk to the insurance company to help cover long-term care needs, but know that if I don't need long-term care, or if I only need it for a few months, my loved ones are going to get a death benefit when I pass away. So no matter what, either me or my loved ones are going to get value out of this policy, right? There's not a world where it's going to be, I pay in a bunch to get nothing like you would with traditional long-term care insurance. So now, as those products have come to market, and you know how it goes in the insurance industry, like once a product hits market and it's popular, guess what? All these other insurance companies want to build a product like that, right, to be competitive.
Right.
So now we have a handful, half a dozen to a dozen companies that offer products pretty similar to this. They all have different quirks and different things about them. And again, that's why you guys are great for clients to work with, because you have access to all of these and it's more customizable on which one's the best fit for your clients. But now sales are ticking back up pretty tremendously. And I think it's a combination of these awesome products, right? So they're products that clients love and see the value in, but then also a greater concern for long-term care, because I think a lot of clients through COVID and now a lot of the retirees have seen their parents go through some long-term care and how impactful that can be to a financial situation. So it's kind of this perfect storm of there's a need and concern, and there's some really cool products. And if we find, if we can marry those, and the client with the right concern finds this really cool product they want to move forward with. So the long-term care sales now are really taking off. And the biggest thing I can tell you is I love it because those products are the ones that I like, that we help you guys show your clients, they're contractually guaranteed from rock solid A-rated companies. And so when it comes to long-term care insurance, where they're going to have to pay claims at my most vulnerable time, right? When I'm at a point where I can't do all of my activities of daily living, I want to be able to sleep at night knowing that's going to be there when I need it if I pay this money to get it. So it's just a really like rock solid solution to show a client. That's really what I like the most about them, is it's kind of a can't lose, fully guaranteed product for your clients.
Which is extremely important for all the reasons that you had just mentioned, kind of about, what it's been like in the past. So I think it's cool. I think, what I've gathered and what I'm gathering now is, at the end of the day, there's a solution, for the need. And, what we can help with is bringing, that solution to whatever the need might be. But also multiple solutions, because I think like the asset-based long-term care, with regards to is instead of having to pay into something that you might not ever need, might not ever use, there's other solutions that can provide, multiple benefits to it, in a lot of cool, unique ways. So man, I just think that was really important to bring to our discussion. So I appreciate you kind of sharing, nerding out a little bit. I'm sure we could go a lot deeper in the weeds on it,
Oh yeah.
but that might be too much. I think, for anyone that's younger, that's watching, just kind of going back at the very beginning, like if you have, especially a young family, like number one, like do you have any type of, life insurance, whether it is, a term policy, and like how much do you have? I think one of the things that's often overlooked is like if you have a very young family, like can you replace income for 20 years, if not longer, depending on, the ages of your kids. But I always look at it, I think oftentimes we look at the breadwinner, right? And saying, hey, we want to make sure that they're taken care of. But what about, who's taking care of those kids, and childcare is, I'm sure, most will know is not cheap. So you really have to look at it from a lot of different angles. So I just kind of wanted to touch on that again. And then I think just last but not least, like if you're nearing retirement or already in retirement, like are there ways that we can leverage, some of these products, are we protected for long-term care? If we're not, have we looked into it? Because statistically, I mean, that's going to be a massive cost in retirement, and two-thirds, three-quarters of those that are watching are going to need it. And so, like, are you at least checking the box to say, I've looked into it at the very least, So, man, I know you're a super busy guy. I don't want to take up too much more of your time. Is there anything else that you kind of want to leave some of our viewers with, that we might have not have touched on so far?
Not
Not to
really,
put you on
man.
the
I mean, the
spot.
Yeah, you really put me on the spot there. No, I would just say, you know, I am a VP of life insurance. So full transparency, I'm probably drank the Kool-Aid a little bit, and I'm a little bit biased, but I will just say that uh, permanent life, and don't be scared to have the conversation about permanent life insurance, because and whether it's to cover long-term care or to pass on tax efficiently to my loved ones or a cause, right? Or um, they're just they're different product. There's somebody who can explain it correctly and get you with the right product. They are really, really viable solutions for a lot of retirees, right? And so I just don't want people to be closed-minded about things. And that's really true of any asset, right? You know that any asset has pros and cons, and you don't ever want to put the wrong client with the wrong asset. Um, but this is an asset. Permanent life insurance is an asset, and whether we're covering LTC or passing it on to our kids, so it could be a right fit for you. So just don't be closed-minded, whether that's about your health or about just life insurance in general. And John and his team, everybody at Rooted can help with that. But yeah, that's my biggest thing I would say is the products now are better than they've ever been. They're continuing to evolve. So there might be some things that exist out there that you never knew about. So it's always important to investigate it and at least have the conversation, like John said, have a plan. That's my biggest thing with long-term care. I even tell my folks this, aunts and uncles, people, my older brothers, like uh, it's a thing, and it's getting more expensive all the time, and it's something we should plan for. And whether that plan is to add an insurance product to help or not, we need to have a
Right.
plan. And so, like any plan, the earlier you can have that discussion and feel good about it, the better. So,
Don't be scared. That's my takeaway. No, I think to what you said is like, be open-minded, have the conversation, and have the conversation with someone, that's going to weigh the pros and the cons, right? There's positives and negatives sometimes, and I think what hopefully our clients know, and the viewers that have had conversations with me is like I'll always look at it from both aspects and just make sure whatever we're doing is the best asset, for the situation, for the goal. So Jake, man, I once again really appreciate you taking the time and just having this discussion because I think it's really important and I think it's very insightful to a lot of our viewers and listeners. So for anyone that's viewing, anyone that's listening, if you're looking for that conversation or you just have additional questions and thoughts, obviously give our office a call, 815-918-4727. Whether it's me, whether it's Joe, Connor, Alex, we welcome, that discussion, that conversation. Jake, once again, really appreciate you being here, and I know we'll chat soon.
All right, brother, you bet. Happy to help. Talk to you soon.
This was Digging In Podcast, presented by Rooted Wealth Advisors.